Welcome to TradeTheMBI.com. This is John. This report is for the 17th. And while we can see that we got a little bit of that weakness that we were talking about the other day when we had the steel dip below, we also ended up with, the orange above the 13.5. And all that we did was come back to the mean, which for us the mean is the ABM yellow, and supported right off of it. You can see major drop in short-term buyers, and some of that's just reflexive of the holiday and people still a little slow to get back on it. But you can see that we were extremely overdone and dropping into the lower zone here, below the 13.5 to ease a little bit of the overbought is healthy, and a little short increase. But they're still going to have to battle the fact that as long as that histogram here is above the 15 level, still okay from a buy standpoint. But we kind of expected a little bit of consolidation into this run. Same situation on the NASDAQ. So the market's running parallel again now, so we're not seeing any divergence. Modest softening of the euro within this massive move, so it's going to have to consolidate that. But yeah, it's quite a significant move in the dollar fade, which just only bolsters the S&P as well as down moves for trade and everything else. So it's a negative in one aspect of trade, but it's actually better for the U.S. side of the situation, and that's certainly going to bolster the S&P because it's just a bit excessive on that move. And I think we talked about that the other day from the political standpoint as to why that's making its move. Treasury moving back up again. Still now the question is a latent move for interest rates. And like I've said before, it's my contention that when you have the higher growth policies, the idea will be to spur inflation to help mitigate deficit as well as debt by devaluing the currency, by the fact that inflation alone will take care of some of that. And if you're behind the curve on raising rates on that, it just helps. And oil, still going to maintain its, of course you got the holiday break in there. It doesn't really affect the readings any other than just creating a space right there. But still excessive from oil rise, but we would expect that to even out a little bit. The potential for a little bit of a retrace still exists coming back into this range right in here, but I think it's premature, especially with the growth issues. It was something that we were anticipating, and likewise with gold breaking out to the new higher levels, and that was an easy read from way back. And like I said, the move on gold in the counter move from when we talked about the broader short on cryptocurrencies playing out perfectly. And like we said, even when we had the buy signals, that we were still in that broader short because we had that no reset of the steel. We finally got a little bit of a move as we were getting close to there. It's getting oversold again, but still dropping below, right around that 10,000 mark. What do we end up getting to? If it breaks that could be significant. So this is like a full 50% retrace of the peak at 20 and small little rise back. So you caught some interest on that 50% retrace, which is not surprising, but I don't think it's going to hold there. So here we had the broader short from the market standpoint as we ended up with a beautiful DOC spread with a plus 13.5. Even though we had the reset of the steel, the reality was it was pretty clean from the break of the ABM, and then it was just a matter of following that, and there were no closes above it, and then it just continued to cascade, and then not even an attempt to get back to the 50% until we ended up with this significant dive, but it got overbought like almost immediately. Your first opportunity would have been right here at the break above the 23%, but all we were expecting would be a move back to the 50, in which case happened. But then we reset at the much higher level above the 23% Fibonacci on this particular case, and that led to what is the current buy setup right now. And the dropping highs with the flat low is always a call back up to the high, which is exactly what's happening, even though it's at a much lower level. And then we'll probably see some softening from there. But overall, spot on. Just nailing it one day after another. I don't see any real problems at this particular point with a continuation of some decent range within a consolidation. And I think that's very tradable intraday, but still the broader aspect, I think that we even ended up with the daily MBI Opus. Let's put that one up because it added to with another iron hawk, so from the Star Hawk to an added iron hawk on the slight little dip. Now, I prefer to have these as individual trades, but what this program will do is it will combine these two and have the stop much higher. I think I prefer them as individual setups, but it should be interesting to see how that plays out. It would be a strong start to the year if it works out, because already we've had a nice run, 100% so far. All in all, good stuff. Nothing too significant to report on this. I think we just have to keep following it where it is. I think we're probably going to continue to see a little bit broader range in the volatility, and unless there's some major political move, I think that we're still heading for higher levels, which we're already 2788. You get back up into the 2800 will be interesting, because I think testing that level again is certainly going to be where the real action is, because then we'll determine whether we're going to be moving forward. And I think if you move past 28, it's pretty hard not to see ES moving to 3,000, but we'll see how it goes. I think that the numbers on inflation and growth are going to be significant coming forward, and that's certainly going to propel things. So it's all exciting stuff. As always, though, I'll continue to report on it and update anything as necessary. Trade well.